Hi, welcome to today's tax update brought to you from the beautiful White Tower of Thessaloniki here in Greece. Today's webcast will cover the most important tax developments in August and September of 2018. So let's move inside and start the webcast. After a short break in August, we are back with our monthly 5-minute tax updates. So let's set the countdown clock and start. We will start today's webcast by looking at the most important developments in the local tax legislation. On the 30th of July, the much anticipated Alternative Investment Funds Law was published in the official Gazette. Together with this law, relevant amendments to the tax laws were also introduced, aiming to modernize the existing tax framework and to promote the emerging funds industry of Cyprus by offering tax incentives for the setup of AIFs and for fund managers. We will not go into the details of these amendments as we have already covered them in our previous webcast. In early September, 2 circulars were issued by the Tax Department. Circular 25 explains the tax treatment of non-return capital contributions to companies which are not Cyprus tax residents. Specifically, when a Cyprus company provides a capital contribution to a non-Cyprus related company without receiving new shares in exchange, this contribution is not considered as an interest-free loan, provided that the Cyprus company does not have a legal right to claim the repayment of the capital contribution at any time, and the amount provided as capital contribution can only be returned to the Cyprus company either through capital reduction or dissolution, only after the lapse of 2 years from the date of the contribution. In addition, the amount of the capital contribution is treated as part of the Cyprus company's assets which are not used in the business, and as a result, interest expense relating to the capital contribution is not tax deductible. Circular 26 clarifies the practice followed by the Tax Department on the taxation of the earnings of insurance agents and intermediaries. The circular states that insurance agents are allowed a 25% deduction on net commissions on initial or renewal of life and non-life policies, as long as they are registered and do not keep accounting books and records. On the other hand, insurance intermediaries who are employees are not allowed the deduction unless they are registered, and in addition to their intermediary role, they carry out insurance services on their own. In a recent statement, the government announced its decision to reduce the current defense rate of 30% on interest income to 17%. The aim is to apply the reduced rate from the 1st of January 2019. According to the Finance Minister, the fiscal surplus created makes it possible to promote such tax reliefs. A relevant bill will soon be submitted to Parliament for voting. Lastly, on the local developments, earlier this month, the Cyprus Investment Promotion Agency announced that the government's scheme for the promotion of the film industry has now been implemented. Interested participants should visit the online platform at film.investcyprus.org.cy, from which they can get information and submit their applications. It should be noted, however, that the relevant laws regulating the tax incentives are still pending for approval by Parliament. Let's now move on to some international developments. Earlier this month, the European Union finance ministers met to discuss proposals to adopt a tax on companies' digital turnover by the end of this year. The EU governments agree that tax rules should be amended to introduce levies on digital services which are currently undertaxed. This is mainly driven from the larger EU countries, which claim to have lost millions of tax revenues due to digital giants shifting taxable profits to lower tax countries. The plan is to introduce an EU-wide 3% tax on digital revenues of firms with global annual turnover of more than 750 million euros and EU revenues of at least 50 million euros per year. Some 200 companies would fall within the scope of the new tax proposed by the Commission, estimating additional annual revenues of about 5 billion euros at EU level. We will now have a quick look at some tax treaty developments. The tax treaties that Cyprus has signed with Luxembourg and the United Kingdom have now entered into force, and in accordance with the entry into force provisions of these treaties, they will come into effect as from 1 January 2019. The provisions of each treaty have already been covered in previous webcasts. We will close off today's tax update with a brief reminder of the upcoming deadlines. The 31st of October is the deadline for the electronic submission of the 2017 personal tax returns by salaried individuals and individuals who do not prepare audited financial statements if their gross income exceeds 19,500 euros. The same deadline applies for the payment of the relevant tax for the tax year 2017. This concludes our tax update for this month. Thank you for watching.